So wanted to take a moment and introduce another customer in this space. We are fortunate to have with us Mr. A R Ganesh. He's the general manager for ICICI Bank, and he's got all of the corporate systems in the mid office as well as the back office. So he's got finance, the HR and corporate systems, but he also has all of the analytical platforms for risk and compliance. Really quickly, just wanted to introduce him here. So I mentioned a little bit about HDFC. ICICI is one of the premier private banks in India, and ICICI needed a system which gave visibility into the equation between growth, risk, and capital, and was a demand that came both from their chief risk officer and chief finance officer. Real-time information as quick or near real-time as possible. So, they turned to their technology group, who had actually just selected Oracle, our OFSA applications, to actually deliver this outcome. So we have the good fortune of having Mr. A R Ganesh. Ganesh is the general manager of ICICI Bank and heads the technology group for treasury and corporate services. He's responsible for all the business technology initiatives implemented by ICICI Bank across treasury, finance, risk management, and other corporate applications. And prior to his present role, he worked with Tesco's India Service Center as the head of program delivery. So please join me in welcoming Ganesh to the stage. Sorry, I'm getting tired. Ganesh, welcome. Please have a seat. Like some water? Okay. So, I think you've seen the pattern of what we've been going through, speaking with Lisa and with Pat. Firstly, just tell us a little bit about yourself and about ICICI Bank. I know you've been there for 6 years. What kind of stuff have you been involved in, and what are some of the key areas of focus for you now?
Yeah, I joined the bank in 2011, about slightly less than 6 years back. And in the initial 1 year or so, I was handling some stuff around corporate payments and some of the HR systems. And eventually came on to this role that I'm currently handling, which is basically I'm responsible for all the technology that runs on the treasury and corporate center. And when we say corporate center, it's a broad term for all head office related activities, which is risk, finance, compliance, HR, general ledger and the whole. And I completely support, my team supports the technology requirements for the treasury, both trading, back office, mid office, all of it. So we've been through quite a bit of, let's say, change over the last number of years. And not only in the area that I run, probably even in some of the other areas across various spaces. There have been times when we've been running through very large migrations across various platforms. So the good thing is that thankfully a lot of them have landed well without any disruption to the customers, without any disruption to the businesses that run these initiatives. So, and it has been good, and whether you see it across the retail banking area or across treasury, in most of these areas actually we have pretty much modernized our platforms. So to that extent, coming on the back of some of those initiatives, the OFSA initiative that we are now embarking on is actually a good time to be in, because a lot of those underlying systems have already actually transformed.
Yeah. So you're a private bank in India. How has the entire risk and regulatory environment and compliance environment, for that matter, evolved since the global financial crisis? The impact was obviously felt, but not to the same degree. But how has the regulator reacted? What has changed for you? And do you see that different from some of the other countries that ICICI operates in?
So thankfully, India was, I think, much less impacted by the crisis as opposed to a lot of other markets. But one of the things that we have been seeing is, as a regulator, in line with a lot of other regulators in the world, I think the entire regulation is becoming more and more data-driven. So as opposed to, let's say, some kind of perception and this one. So today, a very large part of regulation is heavily data-driven. And I think you really hit the nail on the head when you talked about the traceability of what a regulator sees. And today that has become the key ask of particularly the Indian regulator. In fact, as we see, especially in some pockets of the regulatory initiatives, we are already seeing regulation moving away from the so-called reporting or return-based submissions to actually sourcing direct data from the banks. So we are already seeing some initiatives of that happening in parts of the regulator, but not fully. But the fact of the matter is that depending on how these initiatives pan out, we are going to probably see more and more of it. So which means that your underlying, let's say, quality of data, underlying quality of not just reporting, but the way the actual data is prepared for reporting is what is going to become more important than actually what you eventually report. So this is something that we are seeing very, very clearly, heavily data driven, and to the extent that the regulator is prepared to invest more in, let's say, crunching the data and getting their insights out of it, as opposed to, let's say, we probably distilling that and giving it to them.
Right. Okay. And so, the RBI has actually been pretty active. I mentioned very briefly the whole example of ING Bank. Traditionally we saw that the office of the CFO and the office of the CRO, very distinct offices, never the twain shall meet. But now the regulators are asking for, a lot more link up between risk and finance information, and as a matter of fact, even investors are looking for risk-adjusted performance management driven from regulatory requirements. So talk a little bit about what RBI is doing in this regard, and how important has it been for ICICI Bank to unify risk and finance stores, and what has that taken?
Yeah. See, if you really look at it, you talked about BCBS, and RBI is also moving in that direction, whether it is Basel III or the oncoming regulations that we will all go through on IFRS, the Indian equivalent of being that called as Ind AS. So all of those things are driving towards, see, as you said, finance has been, the financial reporting has been on a kind of a track, and the risk and, let's say, risk adjusted performance metrics have been on a different track. So what is now happening, especially with regulations like IFRS, the risk related, let's say, dimensions become very much central to the entire financial reporting highway. So its risk is no more, let us say, a bystander to the highway. So it is very much inherently part of the financial statements that you make. So to the extent that finally when you talk about the ECL and the PDs and LGDs coming into play, so your final numbers that you report in your financial statements have completely risk elements embedded in them, and they are no more any different. So to that extent, it is not, let's say, analytics, which sometimes when you talk about analytics, you get that sense of, let's say, I am actually looking at something from a kind of, let's say, standing aside a little bit and looking at it, but it's no more the case. The analytics that you need to do on the risk side and the kind of models that you use to derive your ECLs and all of that today, very soon are going to actually become part of the final numbers that you report. So from that standpoint, it's a complete paradigm shift. So it's no more for the CFO, the risk elements and the risk models are as important as it is for the CRO.
Right. I couldn't agree more. I alluded very briefly to the demonetization event that happened late last year, and was quite a seismic event, if you ask me. It made global news, and obviously we got a lot of personal feedback of what was going on in the country. How did that impact what you do from a day-to-day basis, and are there any implications to the regulatory environment now from what happened?
See, a lot of it, the impact of it was obviously initially on the end customer and the kind of, let's say, changes that you needed to do that affect the end customer. So the velocity of change that was, let's say, needed on some of these transaction systems that work with the end customers was absolutely unthinkable. Meaning it was literally almost on a day-to-day basis we were making changes in the core banking systems, and not only we, meaning literally every bank, on whether it is withdrawal limits or whether it is, let us say, what kind of customers can actually withdraw what kind of money, and how we will put in those. In some cases, actually, people had to, let's say, sit together overnight and come up with how you will actually trap all those doors. So literally, because it's very easy to actually dictate a regulation, but it's very difficult to actually do that and do that in such a quick time. So that was the initial challenge, let's say for about almost a month or more than a month. But on the back of it, as the whole position eased and a lot of that, let's say, became a little more business as usual, what we saw on the back of that is a humongous need for information in terms of what kind of transaction patterns were happening and how customers were making both good and bad uses of what was being put out, and the kind of, let's say, information both the regulator was asking for and also what was needed by the bank's own internal compliance to make sure that we as a bank are completely on top of not only serving the customer but also being well within the regulatory framework and also making sure that the entire demonetization exercise is not used otherwise. So that was a huge challenge. And as we speak, I think we are still not off it in terms of the data needs that keep emerging, whether it is from a tax standpoint or whether it is from a regulatory standpoint. So that is still continuing. So that is where I think some of the initiatives that, meaning I would have been probably very, very happy if, let's say, we had actually done this offset transformation much before the demonetization, because it would have been probably much easier for us to look at the emerging, let's say, reporting needs that were coming up. But something like this where, let's say, you are unifying a lot of this information and bringing a lot of information from diverse systems into one single platform would actually eventually become much, much more useful.
So it's a great example of if you have a disciplined strategy of bringing together your data and then driving outcomes from that, you can respond very quickly to a very significant external event like that.
Absolutely.
Yeah.
Absolutely.
Okay, so since you brought that up, let's shift to the OFSA project that's going on at ICICI. I know that just because we've known each other for a little while, I know that you've held responsibilities both on the data side in your current role, but you've also done digital transformations for other parts of the corporate or headquarter services, as you call them. Talk a little bit about what are business priorities at ICICI. What are you seeing as the impact on technology spend? What's driving that today?
See, largely there are two parts that are driving that. As you can see, India is a very different market from the rest of the world in terms of it's not as if, let's say, one channel or one form of serving the customer is going to actually become subservient to the other forms. We are actually in a unique situation where literally every form of serving the customer is growing, but maybe growing at different paces. So to that extent, we cannot afford to not invest in various channels. So meaning literally all the way from the traditional channels to the, let's say, the latest mobile-based channels, all of these investments will have to actually go in concurrently, sometimes not necessarily at the same pace or not necessarily at the same level of depth. And that is something that we are seeing on the retail front, on the payments front. And particularly on the payments front, we are seeing a lot of new players coming up, the telecom players coming into payments, the so-called payment wallets coming in. And the government itself is driving a number of regulations in the form of UPI, in the form of Aadhaar-based payments. A lot of that is happening. So one of the things that a bank like us is going towards is, how are you sort of in the middle of all of this, both as a partner with some of these entities which are coming up, so that you don't look at them as adversaries, but rather look at them as partners, and at the same time making sure that the very strong and big customer base that we have, we are always there for them, irrespective of, let's say, what is the need that they have. So that's a big challenge, and it's going to be some time will tell on how
that plays
these things
out.
Are going to pan out.
Specifically to the OFSA project, I mean, you alluded to this a little bit, saying that you wish you were further along, but so far some of the project outcomes that you've already had, how has that satisfied either the internal stakeholders or the regulators? What are you hearing back from them?
See, if you really look at it internally, probably we are somewhere around the midway mark. So in terms of where we are on the entire journey. So a lot of the hard work up till this stage has been more towards data. So it has been a lot of hard work in terms of, as we speak, we are not only changing the entire platform in terms of the engines, but we are actually also changing the entire sourcing of the data. So to that extent, it is not just the let's say, the final analytics that is changing, but it is also the entire plumbing that is changing.
Sure.
So, which is what I would say we are almost at the end of, in terms of seeing the outcomes on data, seeing the outcomes of what, what we talk about laying our hands around the FSDF. So, I think that is where we are right now. And to that extent, I would say it has gone on okay. So directionally it has been okay, and in a large transformation like this, you are going to have challenges which will come when you start sourcing data and when you start looking at it. In fact, Lisa afforded to the point that whenever you do these transformations, you have to keep the customer endpoint in mind. But in addition to that, what at least we have realized is when you do these kind of transformations, or even some of the other core banking transformations, in turn, one of the things that we need to do now as modern banks is also to look at the regulatory and reporting requirements in mind. Because quite often the regulatory reporting and what we look at when we source data for some of these purposes is as good as, let's say, what happens right at the sourcing. So those are some of the challenges that we are discovering. So the kind of quality of data, the cleanliness of data that is there right at the point of sourcing. So that is something that is kind of coming to light. So obviously some of that will be corrected as a one-time effort. Some of that will actually get corrected as we move along. So to that extent, I think in terms of the journey, I think we are actually we are somewhere around midway mark.
Okay.
I think the engines are being configured, and if you ask me at this point in time, I see more challenge around the data than around the engines.
Right.
So we'll wait and see.
So look, I think I want to get maybe a quick recommendation for the audience from you around the following idea. You know, what I've found in these type of projects, particularly when you bring disparate data stores together, like the data store that was serving the CFO, the CRO, also from a compliance perspective, the chief compliance officer, and increasingly we are seeing a lot of marketing data that can actually be sourced from here because there's very rich detail about the customer in this data store. Chief data officers are now trying to define governance for things like BCBS 239. How do you manage, what kind of work did you have to do to bring those people together so they will be willing to go off of a single data store? Because that's a big part of the challenge that I see.
See, to an extent, I think given our size and given the fact that we had, let's say, in some form or other, the older officer running, and in terms of where data was coming in, if not completely, but at least in some forms and some parts of the bank into one central area, our task has been that way relatively simpler. But what we had to do in this exercise is looking at much more granular sources of data than we were used to having. Whether you talk about liability, whether you talk about some of the products like credit cards, where we were not necessarily sourcing granular data. So that is something that is now happening as part of this transformation. And one of the other things that we did right up front was to completely relook at how the various source systems are supplying data, and to the extent that we can visualize, obviously we are never going to be completely right, to the extent that we can visualize, we have actually tried to go far beyond what is the immediate need, in terms of we have tried to look at not just implementing, let's say I have to do ALM, I have to do FTP, so what is the data that I need. So instead of that, we have tried to actually look at, if these are all the data that is there in the various source systems, what is it that we would need, if not for today, but let's say for a number of years down the line, and whether that should be around, let's say, stress testing, whether that should be around IFRS, whether that should be around. So to that extent, we are probably feeling that having done that exercise, we may be about 90% right. So as long as I discover myself in a situation where when I bring in any other new subject matter, whether it is IFRS or whether it is any of those other things which may come down the line, as long as the delta is about 10%, then I think we would have done our job. So we would not have too many shocks of, let's say, the right kind of data not being there, and then you just need to go additionally source 5-10%. So,
and there's a value proposition to all those audiences when that happens.
I think that is the key. If you ask me, that is the single biggest learning that we have had from this project, in terms of take your data really seriously and then use this opportunity to make your data sourcing as simple as possible. The simpler and simpler that we can make. In fact, as part of this exercise, we have actually driven down a lot of change in the way we source data, in the way, let us say, we try and source data as close to the source system as possible, and then try and keep, let's say, a lot of aggregation, a lot of computation at the end of this system, as opposed to, let's say, trying to do a lot of things in between two different systems. Quite often, actually, the biggest breaking point is what you try and do with your data in between two different systems. The more and more you try and do what I call as so-called cottage industries in between two different systems, then I think you really had it. So we are trying to really kind of cut through those cottage industries and try and make sure that you have, let's say, those computations or sources of data either aligned to the source systems or aligned to the destination systems, and try and minimize as much as possible whatever you do in between.
Sounds great. As a quick kind of concluding thought, I know that ICICI went all the way back into the tech stack because you had challenged Oracle to also drive performance around how quickly you wanted these information turns to happen, and you used engineering systems.
Correct.
What was your experience with that?
See, in this area, since I told you that we are probably midway around the entire transformation, I would not be able to say that what is the impact of the engineered systems and what is the impact of the architecture on actually, let's say, coming across with those outcomes on performance. But we have consciously gone in for engineered systems on the basis of our experience with using these systems on some of our other initiatives, whether it is our retail lending platform or whether it is our retail internet banking. So as a bank, I would say that we have been one of the early movers into engineering systems. I think we probably bought one of the early extra data boxes more than 3 years back when they were just being released. And beyond that, we have actually gone with Exadata, Exalytics, and SSCs across various different areas. And across these areas, we can now confidently say that we have the experience of seeing what they can do, how they need to be handled, and what, let's say, performance improvements one can derive from these systems. So having done that and having seen that in different areas, I'm fairly confident that the outcomes that we would want to deliver or we would want to drive for this transformation would also come through both from the combination of, let's say, harmonizing the data model in the architecture and also from the real solid performance that you will get from these systems.
And the lab also, the benchmarks we've done have given us great results. So I think the other thing is you've shifted the onus of managing the entire end-to-end to Oracle. Even though you're responsible for the endpoint, you can turn to Oracle and say, this is your stack, make it work the way it needs to.
Absolutely.
Great.
We have not left any room for you to manage.
So, Ganesh, thank you so much for joining us on stage today. I appreciate your insights and look forward to the partnership that we've enjoyed.
Thank you so much.
Thank you. Round of applause for Ganesh.